Hey, everybody. Welcome to another weekly stock market update. I'm your host, Mark Yagi. Hope you're doing fantastically well. We have melt up underway. We're in the fourth month now. I think we're past the fourth month of the melt up since November 6th. Well, I think it was November, December, January, February. Yes, just November 6th is when I called the green market based on our market timing system. And people are doing well, and I hope you are too. Let's jump into a few charts just so you can see what's up. By the way, this is all opinion education. Don't take this as financial advice. But you can see we have 4 green lights in the market, but this has been like the whole screen is green. It rarely happens. Like every 3-4 years, it happens like this. It's actually amazing. But that also makes me think it's time to start, locking in some profits if you got them, or just being defensive a little bit more than normal. The NASDAQ hit an all-time high and reversed a bit today. So that's telling us something, but still all-time high, lower or higher highs and higher lows. So the market's doing that. The S&P 500 did the same thing. Sorry about all the noise here. That continued. That's a beautiful looking chart after a gap up back in November. The Dow Jones Industrial Average is not doing quite as well, but I mean, it's still doing pretty darn well. It's probably the 4th place contestant in a four play race, but the other 3 are doing so well. The New York Stock Exchange is a beautiful chart, all-time highs again today. And then the volatility index has reverted quite predictably to the mean, which kind of tells me, hey, look, the market kind of could sell off here a bit. It's not that strong, but you want to be wary. It goes to the mean, but sometimes it goes to the other side of the mean. The New York Stock Exchange market index and indicators are showing, if you just go to the bottom, you can see there's like 203 new highs versus 29 new lows. So that's pretty good. And when stocks start to hit new highs, that's why the indexes hit new highs as well. All right, some of the stocks that I know a lot of us watch, certainly some of the fabulous 7 or whatever they're calling them these days. Tesla is going through a period of time where it's got a slight earnings decrease because they keep dropping margins on the cars to get market share. So they're basically trying to take people out of the business, and they're doing a good job because a lot of companies have said, hey, look, we're not going to be able to build EVs unless we just want to lose money. Like Rivian, one of its biggest competitors, loses, I think it's like $327,000 per truck. So every time they sell a truck, they're locking in a loss because they're just not able to make things profitably. Tesla is still a profitable company with very little debt. And so it's the best game in town in the EVs. Unfortunately, the EVs are a little out of favor right now. I believe a lot of that's because the election's coming up. Also because Tesla is on their side, they're lowering their margins by lowering their prices. Still profitable, but basically running people out of business with that. Apple has got some similarities to it, but it's Apple. They sell phones, they sell subscriptions. They're going to be getting into AI now. But there's some profit taking going on in Apple. I know a couple of weeks ago, Warren Buffett was taking some of those profits off the table. And so that's affecting Apple. The company does one thing and the stock does another. That's just the story of these last 2 stocks. Same thing here. This is Nvidia. It's an AI play. It's a chip play. They are the going chip maker, and they are a super stock, and the chart looks amazing. But this is a company. Is it going over the skis of its chart? Maybe. Is the company, supporting the chart? Maybe. I can tell you there's some people that want to take some profits in Nvidia, and as soon as the selling starts, it will happen. It always happens. Just don't get too euphoric if you're in Nvidia, but ride the wave. Same thing with Super Microcomputer, SMCI. A beautiful run up. It hit an all-time high today at over 1,200, had a reversal, and it's a high volume reversal, it looks to me. By the end of the day, we'll have to see, but it looks like there's some volume coming off that top. But I think it's got 1077 as a test, and that's a good level for it to test. On Semiconductor is in the semiconductor business, doing well above its 50-day moving average finally. And if you're in our programs, you collect rent. We collect the juice on it. We sell calls against it. And that pays, 1.5%, a little bit more, maybe more like 2% per week. So if you just focus on that income, on Semiconductor has been doing okay for you, even though the stock is down. And that's the other side of collecting covered calls, is you have to ignore that the stock goes down sometimes. AMD, opposite situation. It's another chip stock, but it is the one that seems to be breaking out last. So AMD is looking promising. Zscaler has had some earnings issues. Even though they were up 105%, the stock has been selling off on volume. So there's a little bit of trouble in Zscaler if you're in that. Alphabet, Google, to me, I believe they're having a lot of trouble because they've got some woke interests in their company that is affecting their stock. And I don't think you can just engineer that out over a couple of weeks. That's a big project. And if you don't know what I'm talking about, just Google their new project Gemini and see all the problems that they've had. They've actually had to pull it from the market because of all the erroneous data that it's been putting out. JP Morgan Chase continues to melt up as financial instruments are melting up as well. Bitcoin, as you know, hit an all-time high of 70,000 US dollars. So that's been interesting. And essentially, things are just doing really well in the market. So listen, there's a lot more I could go over, but you get the gist. Things are good, but they're not going to be good forever. So be careful. Take your profits or start scaling out when you can. Just be a little bit careful on the downside because things are always going to correct and then they'll always continue to go back up. They don't go up in a straight line and they don't go down in a straight line. But so be careful and have a phenomenal weekend. Thanks for showing up here. If you are interested in getting more in-depth analysis, we have a newsletter called Insider Tips, which you can subscribe to in the notes below. There should be a link, and then you get all these things in your email. You'll get when I give you a new stock or a new list, new index, or a new industry rankings, those kinds of things. So go ahead and subscribe. There's a free version, and there's going to be a paid version that we're going to be putting out. We haven't put that out yet, but the free version is going to give you everything that you've been getting so far. So hopefully you can do that. And if not, if you're watching it on YouTube, like, subscribe, notification, all those kinds of things. Thank you for being here. Have a great weekend. See you next time on the weekly stock market update. Take care.